Welcome to Big Idea Herdly, where you can learn something new in just a few minutes. Today, we listen to Lawrence McDonald's book, How to Listen When Markets Speak, which explores the imminent paradigm shift in global financial markets and the strategies necessary for navigating an era of persistent inflation and geopolitical instability. Lawrence McDonald is risk consultant to hedge funds, family offices, asset managers, and investors across 23 countries. Don't go away. Herdly, the editor, will be right back with the story. The world of finance is entering uncharted waters where the old rules no longer apply. The era of globalization, cheap labor, and easy money that fueled unprecedented economic growth is rapidly coming to an end. In its place, a new financial landscape is emerging, characterized by persistent inflation, geopolitical instability, and a shift from financial assets to hard assets. This book dives into these seismic changes, offering insights into how investors must adapt to survive and thrive in this new world. One of the most compelling aspects of this book is its exploration of the coming paradigm shift in global financial markets. The authors argue that the era of disinflation, which began with the fall of the Soviet Union, is now over. Inflation is back, and it's here to stay. This shift will have profound implications for investors, who must abandon old strategies and embrace new ones if they hope to protect and grow their wealth. To understand why this shift is happening, we must first examine the factors that led to the disinflationary era. The collapse of the Soviet Union in 1991 marked the end of a bipolar world and the beginning of a unipolar one, dominated by the United States. This new world order brought about a massive expansion of global trade, as countries that were once part of the Soviet bloc opened their markets to the West. China's entry into the World Trade Organization, WTO, in 2001 further accelerated this process, flooding the world with cheap goods and driving down inflation. However, as the book explains, this era of disinflation is over. The rise of populism, the resurgence of protectionism, and the growing tensions between the United States and China are all signs that the world is moving towards a new era of inflation. The authors warn that this shift will have far-reaching consequences for investors, who must be prepared to rethink their strategies in response to these changes. The dark side of passive investing. One of the key arguments in this book is that the shift from active to passive investing has created a dangerous bubble in financial markets. The authors point out that passive investing, which involves buying and holding a broad index of stocks rather than picking individual winners, has become increasingly popular in recent years. However, this trend has also led to a concentration of capital in a few large companies, distorting valuations and creating systemic risks. The book tells the story of how this trend played out during the COVID-19 pandemic. As markets crashed in March 2020, passive investors continued to pour money into index funds, driving up the prices of large-cap tech stocks like Amazon, Apple, and Microsoft. While these companies benefited from the pandemic, their stock prices became increasingly disconnected from their underlying earnings. The authors argue that this disconnect is unsustainable and warn that the bubble in large-cap tech stocks is likely to burst in the coming years. One of the most illustrative stories from the book involves the rise of Tesla. The electric vehicle maker's stock price surged more than 700% in 2020, driven in large part by passive investors who bought into index funds that included Tesla. However, the authors caution that Tesla's valuation is based more on hype than on fundamentals, making it a prime candidate for a future market correction. The authors also highlight the role of central banks in fueling this bubble. They argue that the Federal Reserve's policy of keeping interest rates near zero and buying up financial assets has created a volatility suppressant that encourages investors to take on more risk. This has led to a massive misallocation of capital, with trillions of dollars flowing into passive investment vehicles that are increasingly divorced from economic reality. The New Washington Consensus. Another major theme in this book is the shift in U.S. economic policy, which the authors refer to as the New Washington Consensus. This shift is characterized by a move away from globalization and free markets towards a more protectionist and interventionist approach. The authors argue that this new consensus is being driven by a desire to protect American jobs and industries from foreign competition, particularly from China. The book recounts the story of how this shift played out during the Trump administration, which imposed tariffs on hundreds of billions of dollars worth of Chinese goods. These tariffs were meant to protect American industries from unfair competition, but they also sparked a trade war that disrupted global supply chains and contributed to rising inflation. The authors argue that this trend is likely to continue under future administrations, as both Democrats and Republicans embrace protectionist policies. One of the most telling stories in the book involves the decline of the US dollar as the world's reserve currency. The authors explain that the dollar's status as the global reserve currency has long been a source of strength for the US economy, allowing it to run large trade deficits and borrow cheaply. However, they warn that this status is now under threat, as countries like China and Russia take steps to reduce their reliance on the dollar. This shift could have profound implications for the global financial system, as it would make it more difficult for the US to finance its massive debt, and could lead to higher interest rates and inflation. The authors also discuss the impact of the New Washington Consensus on energy markets. They argue that the US government's push for renewable energy and its hostility towards fossil fuels will lead to higher energy prices and increased volatility in energy markets. This is because the transition to renewable energy is likely to be slower and more costly than many policymakers anticipate, leading to supply shortages and price spikes. The psychology of bubbles and the mania of crypto. Finally, the book delves into the psychology of market bubbles, with a particular focus on the recent mania for cryptocurrencies. The authors argue that the rise of crypto is a textbook example of how bubbles form and burst. They point out that the rapid rise in the price of Bitcoin and other cryptocurrencies in 2020 and 2021 was driven by a combination of speculative frenzy and the belief that crypto could serve as a hedge against inflation. The book tells the story of how this mania played out in the real world. It describes how millions of retail investors, many of whom had never invested in anything before, poured their life savings into crypto, hoping to strike it rich. The authors recount the tragic story of one investor who borrowed heavily to buy Bitcoin at its peak, only to see its value plummet by 50% in a matter of weeks. This story serves as a cautionary tale about the dangers of speculative bubbles and the importance of understanding the risks involved in investing. The authors also explore the role of social media in fueling the cryptomania. They argue that platforms like Twitter and Reddit have created an echo chamber where investors reinforce each other's beliefs and encourage each other to take on more risk. This has led to a dangerous feedback loop where rising prices attract more buyers, who in turn push prices even higher. The authors warn that this dynamic is unsustainable and that the crypto bubble is likely to burst, with devastating consequences for those who are caught up in it. In addition to the crypto bubble, the authors discuss the broader implications of the psychology of bubbles for financial markets. They argue that bubbles are a natural part of the market cycle, driven by human emotions like fear and greed. However, they also warn that the current environment of low interest rates and easy money has made bubbles more frequent and more dangerous. The authors caution that investors must be vigilant and avoid getting caught up in the hype, as the consequences of a burst bubble can be severe. As the editor of Hardly, by understanding these shifts, we can navigate the future with a cautious yet informed approach, ready to adapt to a world where the old rules no longer apply and new opportunities arise. In revisiting the crucial theme of a paradigm shift in global financial markets, we see how the dynamics of the world economy are undergoing transformative changes. The disinflationary era that defined the last few decades is giving way to an inflationary future marked by geopolitical instability, the decline of passive investing, and the rise of hard assets as the new safe haven. One of the most striking stories that encapsulate this shift involves the 2022 collapse of Archegos Capital Management. Archegos, led by Bill Huang, was a family office that utilized immense leverage to build massive positions in a handful of stocks, particularly in tech and media sectors. For a while, Huang's strategy seemed unstoppable, and his fund grew exponentially. However, the excessive risk-taking and reliance on borrowed money eventually led to a spectacular downfall. When a few key positions turned against him, Archegos was forced to liquidate over $20 billion in assets, causing massive disruptions across the market. The story of Archegos is a stark reminder of the dangers of over-leveraging in a volatile market and how quickly fortunes can change in this new economic landscape. As we move forward, it's crucial to recognize that the financial strategies of the past may no longer apply. This book urges us to listen carefully to the signals the market is sending and to be prepared for the seismic shifts that are already underway. By doing so, we can position ourselves to not just survive, but thrive in the turbulent years ahead.